Well, stock markets from Asia to Europe have started the week lower after Friday's escalation in the US-China trade war, hours after Beijing announced plans to increase tariffs on thousands of American goods. President Trump said he would hike charges on Chinese imports. Now, talks among the world's leading economies at the G7 summit over the weekend seem to have done little to calm the concern over the future of the world economy.
President Trump touched down in Biarritz, seeking backing for his trade war with China. But with growing fears of its effect on the global economy and his threats of tariffs against some of those around the table, he was unlikely to get it. The president has warned host country France he'll increase charges on French imports, including wine, in response to their digital tax, which will hit big US tech companies. The EU used the summit as an opportunity to stand behind its member state.
If the US imposes tariffs on France, the EU will respond in kind.
As the UK prepares to make its way out of the EU, the British and American leaders discussed post-Brexit trade. An enthusiastic Boris Johnson talked up the chances of a quick deal.
Well, the Americans are very ambitious to get this done, as fast as possible, and they will really want to results, within a year, I suppose, by next June or July.
The summit has also seen the US and Japan agree to core elements of their own trade deal, with the Japanese buying up some of America's leftover produce, unsold as a result of the dispute with China. At one point, President Trump appeared to admit to having second thoughts about his escalation of the trade war with Beijing. The White House has since clarified, saying his regret was not pushing tariffs even higher.
Well, now we know that the two sides are apparently talking again. Well, for the very latest, let's cross over to Barbara Wesel, who is keeping an eye for us on the G7 summit in Biarritz. Barbara, so many topics, but certainly Trump and trade conflicts seem to dominate the agenda. And we seem to have another development that we've seen before, namely G7 equals G6 plus 1.
Yes, Donald Trump just threw us another curveball. We were already at the point saying what a horrible washout of a meeting in a lovely place, actually, as you can see behind us. But nothing, no movement on trade. Trump is obstinate and unmovable as always. But then, just half an hour ago, he stepped out here and gave an impromptu press conference where he said, we will have a great talk with China very soon, and things will be well, and we'll have a breakthrough, and we are ready to resume negotiating with the Chinese about the future of our mutual trade. So, I mean, just talking about backtracking, it doesn't even describe it, because yesterday night everybody was ready to say, for heaven's sake, Western leaders have tried to sort of implore Trump, don't continue like this, don't do this, the world economy is suffering, all of our economies are suffering, and Trump didn't seem to listen whatsoever. We heard the quote of, yes, he was regretting not having started the trade war, but the very opposite of that, not having slapped even higher tariffs on the Chinese. And now he just goes the other way. So the problem here is that the worst enemy, as we all know, of world economic development is uncertainty. And that is what Donald Trump creates here, constant uncertainty.
All right. Barbara Wesel there, thank you so much for your insights there from the G7 in Biarritz. And joining me here in the studio now is Ferdinand Fichtner, Professor for Macroeconomics and Economic Policy at the University of Applied Sciences for Engineering and Economics here in Berlin, now that we got that one out. Now, you've been following, obviously, the G7 summit and what we've just heard. What do you make of all that?
By now, I'm actually positively surprised in a sense, because the news we get from Biarritz are more constructive than we might have expected last week, and in particular might have expected last Friday, when this escalation of the Chinese-US trade conflict went on. So what I'm making of it is, in a way, that it confirms the intention of Trump to destroy everything that is somehow multilateral and to basically bring everything down on a bilateral basis. we've seen the positive relationship between Trump and Johnson, which is certainly not a surprise, but we've also seen that the relationship between the US and Japan is moving forward in a way. So everything on a bilateral basis seems to be fairly smooth, but on the multilateral basis, Trump seems to feel in a way incarcerated, or he seems to avoid these multilateral situations. And that's what is actually, in a way, the implicit outcome we might take from this whole summit.
And that, of course, poses problems, certainly for the sides who would like to act on a multilateral level, like the European Union. We know that France, and that was also discussed at the G7, says they will impose taxes on tech companies, predominantly US tech companies. The US says, no, if you do that, then we will put tariffs on French products, wine in particular. And the EU now says, okay, if you impose taxes or tariffs on France, the EU will stand together, we will retaliate. Are we looking at a new sort of trade war brewing here?
At first, I would hope that they stay together, the EU being by nature a multilateral institution. I would hope that the EU stands together and is not divided, as in other questions like the Amazonians, the rainforest thing, for example. But yes, I could imagine that a new conflict is brewing up. Trump is steering into the elections, and he will probably try to avoid a massive conflict in the year 2020. So there is some hope, but it's not really clear.
It's not really clear. But what we know is that Asian shares certainly took a beating this morning. Things have recovered somewhat by now. But they did take a beating. China's yuan hit an 11-year low. And that, of course, with those latest escalation in the trade war between the US and China. Hong Kong's Hang Seng Index dropped 3% in morning trading. The Shanghai Composite was down 1.4%. And Japan's Nikkei dropped sharply as soon as trading began, ending down 2.2%. South Korea's Kospi was also in the doldrums, closing 1.5% lower. So all of that, the markets certainly struggle with what's going on. But now we know that Trump's saying he regrets not imposing higher tariffs and saying that Beijing called him and that a deal could actually be within reach. A real roller coaster, and Ashutosh Pandey, they're joining us from the Frankfurt Stock Exchange. Ashutosh, can investors actually still keep up with all these rapid changes?
Well, Monica, it certainly is difficult for the markets. As you can see from the DAX behind me, it started in the negative, then suddenly just went up and recovered the losses after Donald Trump did say that China called him. But there is a sense of loss of confidence in what Donald Trump says. And that's the reason why the investors feel that both sides have not been actually dealing with this trade war the way it should be dealt with. In fact, one of the analysts also remarked that the best thing that Donald Trump, in fact, can do to ensure that there is stability in the market is to keep quiet. And that effectively means to keep away from Twitter. Because there is growing uncertainty. The markets have suffered because of these tweets coming from Donald Trump every now and then. And there is no end in sight to that.
Right. Ashutosh Pandey there from the Frankfurt Stock Exchange. Thank you. And Ferdinand Fichtner here in the studio. We've got 20 seconds left. Anything to add to what you just heard?
I think we have to be clear that this whole situation of uncertainty already hurts the global economy. It's not only if an actual increase of tariffs hits, it's already hurting. And this is what we should be worried about, actually.
All right, Ferdinand Fichtner there from the Berlin University of Applied Sciences for Engineering and Economics. Thank you so much for your time.